Good morning, traders. Welcome to the Simple Trading Life. This is Scott G, and I am so glad you could join us today. We will be looking at the market. We'll do a little bit of teaching, and then probably wrap things up probably around 11 or so. Hang on one second here. My wife is texting me. All right, just had to answer my wife. Sorry about that. I always have to take care of the family first, right? Okay, so got your comments. Oh, I see we got several people in here already. So welcome. Welcome to everyone, and I've got your comments right there. I'm a little bit late getting started this morning. I usually try to get going around 9:45 with the live stream. But was running behind, had a few things going on. Then I got to take my walk late, and I just got home from my walk today. Hot, steamy morning, but still got a little over 3 miles in this morning, so pretty happy about that. Well, let's go ahead and get started. There's going to be, well, I see we got more people joining us already, so welcome to everybody joining us. As normal, let's start by taking a look at the overall market, the S&P 500. We got the E-minis up here on the 30-minute chart. As you can see earlier, let me squeeze this in. There we go. Okay, earlier we broke through this trend line, spiked down, then we came back up. You see this break here. Right here was our opening candle of the day. Those of you who are opening range breakout traders, let me go ahead and give you your range. If that is something you like to trade. Okay, so that is your high here, which is, what's that say, 27. We're going to get it close. It might not be exact. Down to here. Whoop, why did it not click? Let's try it again. There we go. So I'm going to give you your opening range. There you go. So you're looking for a strong break out of the top or a strong break out of the bottom. But at the same time, you also want to know where are your likely targets. Okay, so if we break to the upside, right, so far we've had upside momentum, right? Even though we flushed down, we came back with this strong candle trying to push back into this trend here. So if we break this level of structure, and again, I'll draw it in for everybody, just so you can see. And it would be down to the tops of those bodies. Okay, so if we break, which we did, and it looks like we're kind of breaking and retesting right now. If we go higher, where's our next likely target? Okay, so our next likely target, you're going to look for obstacles, you're going to look for pivot points, you're going to look for levels of structure. Well, it's going to be right up here, right? It's going to be right up here. Why? Because that was a pivot, a fairly strong pivot, because you see the strong move to the downside that was created there. So what I would be doing, and as you can see right here, I got an alert in. I am not in any trade right now. Okay. However, if I was going to take a trade, let's say on the break here, a strong breakout, the reason I have this marked, that's to warn me that we're getting near the top of this pivot, right up through here. And I'll just do it like this. Again, I'm trying to give you guys visuals. Let me drag that across. Okay, something like that. You see, I already have it on there. I can just visually see where I need to be alerted. But if this breaks strong and goes to the upside, I would be looking at this as a take profit target, right? Because it was this strong pivot right here, strong pivot to the downside. And that would be an area where price would be likely to at least pause or stall, if not turn around and reverse. Wow, got a lot of people joining us this morning, so welcome. If you guys are brand new, please give us a thumbs up. Hit that like button. That really helps us out with YouTube, and definitely subscribe to the channel if you're new here. and turn on your notifications bell, and you'll always know when we go live. So we're paying close attention right now. Okay, you see this is a key level that we have broke above. We've come back and retested it, and now we're trying to go higher. So if I was looking for an entry, let's see here, I would be looking at, I'm just going to give you an idea, 32.2575. So let me come over here. Okay, depending on the trading platform that you're on, and we're getting up there right now. So I was saying 32.2575. Now I'm going to look above. Is there anything that looks like any huge obstacles? No, right? But as you can see, you see how price right now, whoops, I'm sorry, that's the wrong one. Give me a second. Would help if I had the right chart up here. There we go. I'll drag it down. Okay, so what we really want to do is we want to get above here. So that's 32.27.50. 32.27.50. We want to get above that. See this? That's showing you that's been the high of the day so far. So I not only would want to break that, I'd want to break it by about 4 to 6 ticks. That's me. That's me. So maybe I put a standing order right here, 32.2875. All right, so that is 1, 2, 3, 4, 5 ticks above the high of day. So that's shown we had strong upside momentum. Now we're resting, right? And we sort of came back. If I go back to the other charts, it says now I have an order waiting right here. Okay, I've got an order waiting right there. And nothing will happen unless we get a strong breakout this direction, right? You see how we just barely about a tick or so above that? That's not a strong breakout. So if you're playing opening range breakouts, you're looking for a strong breakout. Okay, some people. Now, I've been getting a lot of questions lately because everybody sees how good a break, retest, and go pattern works. But you got to remember, a break, retest, and go is not going to happen on every single trade or on every single break of whatever, right? So if you break a level of structure, okay, here, okay, we might get a break, a retest, and then a go. If you break a level of support and resistance, okay, that's possible. If you break a major trend line, it's possible. Okay, but you know, some people are always looking for it. You can't always look for everything. So if you like to trade that pattern, you've got to know where it's most likely to occur, right? Where is it most likely to occur? On an opening range breakout, I don't know that it's always going to occur, right? Because when you're looking for a breakout, you're looking for a quick pop. And to me, if we got a strong breakout of here, you know, it would be highly likely we'd get up around here. That's why I have this alert that would let me know, okay, I'd probably go ahead and already have an order waiting up here to sell. But that would let me know that we're just about to this level of structure, which would be a highly likely area where price would either pause, stall out, or possibly even reverse. All right, now so far, nothing's happening. We're halfway through this second candle. We've got a little bit less than 15 minutes to go on this second 30-minute candle. We may, I'm not saying this is what's going to happen for sure, but you could potentially get a 3-candle pattern play here. Okay, we've got this strong upside candle. If we get some form of a resting candle with not too big of a wick, and that's not too big, so if we get a doji, a spinning top, or even a little hammer here, okay, you'd be looking to take out the top. And then you would be looking for a similar magnitude as the body of this candle right here, okay, which would do what? Get us right up here about where this next level of structure is. All right, so you see that's a spinning top right there. If it would just stop right there, if this was the end of the candle, that would be a sure sign that it's very likely that we're putting in a 3-candle pattern play. Now, that's a name, all right, so don't take it too literally. If you're new, 3-candle pattern play can be more than 3 candles, right? It can be one, you could have 2 resting candles and then it takes off. You can have a resting candle, and then one candle comes about halfway, and then the next candle goes the rest of the way. That's called combined candles or blended candles, right? But a 3-candle pattern play, what you're looking for is that the magnitude of this right here, if you get a resting candle and the top gets taken out, is going to be similar in magnitude. It could be a little smaller, it could be a little bigger, or it could be exactly the same. Right? But it's just a pattern. It's a price action pattern that plays out a lot. All right, and let's look at some other things just while we're here. Are we in an uptrend, downtrend, or sideways trend? Okay, I'm asking the question. I'll answer it for you. But if you look at the price action here, right, what would you say we're in? Okay, we were in a downtrend. Right, because we can see the widening of our 3 equal. Sorry about that. My phone is ringing, but I'll quickly turn that off. These equal exponential moving averages. This is the 10, the 20, and the 30. Okay, so when they're wide, we know that price is downtrending, right? You see that? Okay, and then what happened? Then you can see, even though it was starting to move down, it was also starting to move sideways, right? So kind of from here across here, right in through here, we sort of went into a range, right? It's a decent size range, so you're basically going from here to here. I would like, those are kind of like outliers. Okay, so from like here to here, all the way across here, we were sort of in a range, right? That tells us that momentum to the downside. And we had looked at this. Remember, I'd drawn some lines before. You see how it was flat? See how it was flat, and then it came up here, right? And then we kind of had another range through here. Here, I'll just draw them in. Makes it easier for you. Get the drawing tool. All right, so from here, basically to there, and there, from there to there. Okay, see that? See how that's ranging as well? And see how this was flat? We couldn't get through there, so that's why price was going up and down, right? But now we're attempting to break above this level of structure. If we do, where's our obstacles? Okay, there really isn't any. Okay, there really isn't any. So if we can get through here with any kind of oomph, we should be able to at least shoot right up to here. That could be a very high probability trade. You guys saw I've already got a standing order waiting above this, right? Above this, if we would take this out and start moving up. Okay, I hope that makes sense to everybody, and see the trend that we've been in since last night at about, is that 8 o'clock? Whatever time that is. Let's see, it opens at 5:36. Okay, so since 6 o'clock last night, we've been trending up. Okay, we've been trending up. I didn't draw this line until we had 3. I drew this line once this came back. You see that? 1, 2, 3. 3 touch points. That tells me, okay, we're trending up. Besides the fact that we went higher high, higher low, equal high, right? A little bit higher low, and now we're making a higher high. Okay, that was my trigger. I'm in. All right, so I want to show you what I'll do here. Okay, right here. I just got filled. That's what this means. Okay, and what I'm going to do is I'm going to put a stop right here. So the most I can lose is 75. That's the most I can lose on this trade. If it comes down and takes me out, that's fine, right? That's what you put a stop in for. I just got stopped. Okay, so I got stopped out, minus 75. Now, let me come back up here. I'm going to put another standing order right there. Okay, you see we came up, but we've come back, and I got stopped out, right? And I got stopped out. So I put another standing order in, and it's just above here. Again, we're looking for momentum to the upside. We're looking for momentum. We didn't get it, right? We didn't get it. So we moved up a few ticks. It triggered, went up a tick or so, and then it fell back down. See, now it's even starting to go red. But this is why you use stops. So I get asked a lot in the room, okay, should I use a mental stop? Should I use a mechanical stop? I think you should use mechanical stops whenever possible. Okay, but if you're using a mental stop, you have to hold hard and fast to your rules. So whatever your risk tolerance is it $50? Is it $100? Is it whatever? Because only you know what your account size is and what your risk tolerance is. Okay, so I know for me, I know what mine is, but I'm saying for you, whatever it is, if you're going to use a mental stop, you have to hold hard and fast. Okay, so I'm going to make something up. Let's just say your mental stop was 75. When price gets back to like 50, where you're down minus 50, you should be ready to stop out like almost immediately if you're using a mental stop. You don't want to wait till you get to 75, because if you get to 75, what could happen? It could shoot down past there very quickly. Now you end up stopping out for 87.50 or $100 or 125 or whatever. So you want to be ready. You want to be ready. Okay, I see price is trying to move back to the upside again, but we have a standing order. There's no reason to get excited. There's no reason to get excited. One of the biggest mistakes I see a lot of traders make, okay, I always tell them, if you get stopped out, that's okay. You can always re-enter if price goes your way. Well, what will happen is they get stopped out, comes down, remember it just went slightly red, and then it starts to go green again, and they immediately re-enter. Well, wait a minute. This wick is telling us that there was some resistance in here. You don't want to immediately re-enter just because it just went slightly green. You notice, where did I move mine? I went from, what was my original one? 32.2875, I think was my original entry. And I ended up getting stopped out. And now I'm at 32.2925. So I'm higher than that. Okay, I moved it up higher than that. Why? Because I know there was some resistance there. Okay, it started to go, but then it immediately knocked it back down. So you don't have to get excited, right? What if it never goes back up there? It never goes back up there, right? The order never triggers. You can cancel the order. And if we get some sort of signal to the downside, well, then we could look at shorts. Now, let's go back. So we were talking about, what are we in any kind of a trend? No, but we could be getting ready to enter into an uptrend. Trend is up. That's what I was starting to talk about. Even though we came back down below, we immediately got back up above the trend line, right? We're above the moving averages, okay? Price is above the 10, 10's above the 20, 20's above the 30, and they are starting to widen. They are starting to widen. Now, a much more aggressive play that I would never do, but I know some people would, is if they entered here on this break, they would put their stop clear down below the 10 here. Okay? Now, if you have an account size that allows for that, where your risk tolerance is still within your rules, that's fine. To me, that's too big of a stop. For me, I'm not saying for everybody. I don't want to stop. Okay, if we were below the 10, we're going to be down here around 32.20, and price, my entry is going to be up here around 32.26. That's a $6 stop. That's a 24 tick stop. All right, so for me to take that trade, I'm normally looking for at least 2 to 1, if not 3 to 1 risk to reward. There's no way, right? There's no way. So even 2 to 1 would be 48 ticks of profit I would have to get. So is there 48 ticks from here to here? It'd be pretty close, right? That'd be pretty close for 2 to 1. For 3 to 1, then it's another 24 ticks on top of that. So that'd be 72, right? 3 times, yeah, 72. Okay, so I'd have to get 72 ticks if my stop was clear down here below the 10. That's how you have to figure these things out. You got to come over here and look and say, okay, what's my next reasonable target? Is it going to give me what I'm looking for? If I'm looking for 3 to 1, am I going to get it? If I'm looking for 2 to 1, am I going to get it? So on and so forth. So that's how you calculate that. All right, so far we got about less than 3 minutes to go. Price is still just hanging out right there. We'll wait just a few minutes, and then I want to go back and we'll probably go over to TrendSpider. And I want to show you guys how you can look at different things and determine, the question came up over the weekend. A couple of people asked me, when you say look at the bigger picture, what do you mean? And how can that help me take higher probability trades? So that's what we're going to look at here in just a couple of minutes. I'd like to, we'll let this next candle right here start because we've got less than 3 minutes. We've actually got about 2 minutes to go on this candle. And then we will go over and we'll go to TrendSpider and we'll pull up a bunch of different things. We'll pull up some forex, we'll pull up some equities, maybe some ETFs, we'll see. I won't spend too much time on it, but I want to show everybody kind of how you can determine whether something is a higher probability trade or not. So we'll do that here shortly. So got a nice group with us. Welcome everybody. Hope everybody's having a good Monday, a good start to their week. Mondays and Fridays can always be a little bit tricky. You're coming off the weekend. You can take the news that came off of the weekend and it'll artificially cause the market to either go up or down early. Then things kind of settle in. Fridays, you're ending the week, right? And who knows what's going to come into the weekend, and the same thing can happen on a Friday. Things can get a little bit out of whack. Some people I know don't even trade Fridays. I do. I think Fridays are fine to trade, but I know some people that won't even trade a Friday. They only trade Monday through Thursday because they think Fridays are more heavily manipulated. And there's a little bit of truth to that. I would say maybe not the whole day, but maybe a little bit more manipulation happens on Fridays than Monday through Thursday. And what we mean by manipulation is obviously big money controlling what price is going to do, and they're trying to set things up. Remember, big money, just always keep this in your mind. Big money has a much longer term outlook than you or I, even if you're a swing trader. Right? Even a retail swing trader, even if you're used to being in trades for several weeks, that's nothing compared to what big money is looking at. Big money is looking way off into the future, and they're always trying to set things up for themselves. So that's what we mean by manipulating. They're trying to manipulate price to get it to certain value levels where they feel good buying or where they feel good selling, taking profits, right? Because they can't buy and sell all at once. It's been a long time since we've talked about this, but obviously institutional money, sometimes we're talking about hundreds of thousands, millions, and sometimes even billions of dollars. All right? They cannot just buy all at once and sell all at once. They have to scale into a position. They have to scale out of a position. And sometimes that takes a long time. And what I mean by a long time, let's say they want to exit a position. All right, they bought, I'm making something up. Say this is like a monthly chart. They bought way down here. This was the level they wanted to exit at or begin exiting at. When it came up here, they take some off, right? Then it comes back down. Then it comes back up. They take some more off. They take some more off. Now it starts going up a little bit. They're going to wait maybe for a pullback and a retest. They take some more off. Do you see what I'm saying? They have to do it in chunks, both the way they buy and the way they sell. So they scale into a position, they scale out of a position. So they're always trying to think, how do we get price into a zone that we think is a value to buy? How do we get price into a zone that we think is a value to sell? All right, so we're starting this new candle. So far, not a whole lot of action. Here we'll set some alerts. I mean, obviously we'll know if it starts going up because we'll get triggered. Okay, but I'll set this alert for going up. And we'll set this alert down here if it starts to go the other direction. Then we'll get warned either way. Okay, we've got our alert set. So let's go and let's bring up TrendSpider. Get logged in. And it should bring it up. Okay, and here we go. I was looking at Target recently for somebody in the room, so that's the last chart I was on. Akawande, good to see you. Hey Scott, I will be following your style of trading. Do you have thinkorswim scanner setup parameters to identify good options markets to scalp for selling and buying? Okay, so I don't use thinkorswim for scanning. I use TrendSpider, what we're on right now. If you go back and watch, if you're in the room, if you're not, definitely join our room, it's free. And then you go into the past videos, which will be all the live streams, and just go back and watch the last 2 or 3 and watch them at like 1.5 or 1.75 speed. You'll go through them much, much faster. I've got some of those scans in there. Okay, I've got those scans in there of what you should be looking for. And that'll help you, right? That'll help you identify. Now, even once you've identified, when they come up over here on a scan, right? When they come up over here on a scan, let me get rid of that. That was an alert I had and it's expired. You still need to go through and look at each one and see the bigger picture and smaller picture. And that's what we're going to look at right now is what does the bigger picture mean? Or sometimes I'll say take a wider lens view of what you're trading. All right, so we're just going to start right here with Target because this was brought up in our room. One of the traders in our SimpleTradingLife.com community was asking my thoughts on Target. All right, so let's just go ahead and take a look at it. Target has obviously been in an uptrend, and then what did it do? Okay, look right down here. This is our momentum indicator. Okay, what did it do? It started ranging. But it not only started ranging, it started doing what? Going into a contracting range. Okay, that means that the range is getting smaller. It's getting tighter. Okay, we also know we have a level of resistance right across here. Okay, how do we know? Well, it wasn't able to get through it here, wasn't able to get through it here, wasn't able to get through it here. So if we can break this level, those are the kind of places that we might look for a break and then retest because we know this is a key level of resistance. Okay, same thing. If this contracting range to the bottom wasn't able to break support, wasn't able to break it, wasn't able to break it, wasn't able to break it. If we would break to the downside, this is the kind of area where we would look for a break, a retest, and then go. Right? Now, somebody might ask, why does a break, retest, and go happen? Well, it's kind of twofold. Again, it comes back to big money, right? So we're going to call them smart money. That's what a lot of teachers call them, right? Smart money and retail's dumb money. So just using the same terms that a lot of people use. So why would we have a break, retest, and go? Well, there's a couple of reasons. Number one is they want to trap retail, right? They want to trap retail. So what happens? You guys have all seen those videos and those memes of retail traders and the smoke rolling out of their head, and no matter what they do, it seems price does the opposite. I know you guys have seen it. Well, that is big money manipulating retail. So let's just say, I'm making this up. Let's say price comes down here and we finally break through. Well, if we've got this trend line down here, probably so do millions of other people around the world, right? Okay, because that's one of the basics. where are most retail traders likely to have their stops if they're long? If they're long, right, they're going to be just under this trend line. Okay, you know, everybody's going to be a little bit different, but it's going to be somewhere just under this trend line. So let's say price comes down, breaks, now it starts hitting those stops, right? So it kind of comes down, maybe we're going to say down to about this level across here, right? It's going to come down, it's going to take all those stops out, it's going to look like it's starting to accelerate. What's retail going to do? Think about it. Remember, I've told you guys this a million times. Trading comes down to common sense. Big money trades with common sense. Retail does not. Retail trades on emotion. So what does retail do when this comes down through and breaks through and takes their stops out? They freak out, right? Because they just lost a bunch of money. Now they see price starts to accelerate this way. They all start to go what? Short. And then what does big money do? They get down to about maybe right here. And then they turn around and they buy, and it forces price back up. They come back up here. Okay, so retail just went short. They got stopped out when they were long, lost a bunch of money. Price starts to accelerate. They go short. Almost immediately after they go short, price comes right back up and goes long. What do they have to do again? Think about it. They're going to immediately get out, and they're probably going to flip their position again. And they're losing every time they do this. Then it comes back up, retest here. Now retail thinks, oh, we're going long and we're going to get back up in here. And then they turn around and that's where the go is. That's where the go is. Then they really take it down to, like, say maybe here, this pivot right here. I'm just making this up. But then, so that's when you're going to get your break, your retest, and then your go. And all they're doing is totally freaking the retail traders out, which are playing right into their hands. Okay, so that's why break, retest, and goes happen so often. And it's usually going to be at a key level. So like if this one would break, you're going to probably see a pop, maybe up near here. Okay, maybe up near here. Then it would pull back, retest the level it broke, and then it would take off and make a higher high. And when that happens, anybody who was short up here retail-wise, their stops get taken out. They flip. That's what you call that. They flip. So they go from being short to being long. Almost immediately after they do that, it comes back. They get stopped out again. Okay, now they think it's going to come all the way back down into here. They turn around and flip back to short. Then we get here. This is the retest, and then we go. And the cycle just keeps repeating itself over and over and over again, right? So that's why it happens so often. And the funny thing is, the markets have been around for, you know, over 100 years, right? The markets have been around forever, and retail falls for it almost every single time. Okay, because retail trades on emotion. All right, I talked a lot this weekend. Really maybe over the last couple weekends, but a lot this weekend on trading. We just got triggered again, so we got to get back over there. But on trading, a systematic, mechanical process that removes emotion. Okay, so we're starting to try to make a move up again, right? So look where it retested. It actually retested the trend line. Okay, came back, retested the trend line. An aggressive play, okay, right here on the 10 as well. Right here on the 10. Let me make this bigger just so you can see. All right, so here we go. We broke. Okay, we rested. Came back. We retested the trend line and just above the 10, and now it's trying to push higher. If we can get up above here, okay, we might get some momentum to the upside. It's got to be more than just a tick or two. That's all that is right there, is a tick or two. It's got to be more than that, and then we got to get up here. And then that's where you would look for an exit. All right, so that alert just went off. That's why I wanted to come back over here. But let's get back. let's get back. I want to watch this just for a second. Let's see what it does. Right now, it's kind of waffling. Waffling, again, for those of you who don't know, is when price just does this. Over, like, say, a couple dollar range, just goes up and down, up and down. That's waffling. If it does it too long, you start to get concerned that price might go the other direction, for the opposite of whatever you think it should be going, right? If it's moving up and it gets up here and it just keeps waffling back and forth here and never makes a break to the upside, then you got to start being more concerned that price might start to roll over and start going the other direction. Okay, I'm not saying that's what's going to happen here. I'm just telling you those are the things that you watch for. Those are the things that you watch for. So let's do this. Let's get this back just above here. We'll set another alert so we can go back and keep studying our other things. In fact, I'm going to make that, because that'll put it just above, and I want to move this one up to about right here. Okay, now it's going to tell us if it starts to drop, and that's going to tell us if it starts to go ahead and move up. All right, back to TrendSpider. Okay, so that is the phenomenon of break, retest, and go patterns. You can also have a bounce, retest, and go. All right, so what does that look like? I'm trying to see if I see an obvious one on here, but it's exactly the opposite of you're not breaking through something. Let's just say we came down here, we bounce. Well, kind of here, but let's just say this came down and bounced here, comes up, retests, and then it goes. You see that? So you would have been moving strong to the downside. You get to a trend line, a support level, a moving average, whatever it is, strong move down, you bounce, then you come back, retest, and then it goes. So that's the opposite of a break, retest, and go. That's a continuation pattern. A bounce, retest, and go is a reversal pattern. See this here? So just imagine this came all the way down. Strong move down, strong move down, then it bounces, comes back and retests, and then it goes. So you can have a bounce, retest, and go, or you can have a break, retest, and go. The break, retest, and go is a continuation pattern. The bounce, retest, and go is a reversal pattern. So we're getting a few more people joining us, so welcome everyone. Okay, let's now continue. We're talking about how do we know when we're taking a bigger picture look. All right, so right now, this is the daily, right? This is the daily. Let's go to the monthly. You should at least go to the weekly when you're looking at a bigger picture. All right, so here's the monthly on Target. And I'm only using Target because somebody in the room had asked me about Target over the weekend. So what are we doing on the monthly of Target? It's pretty clear, right? Okay, here was our last pivot low that we have not come all the way back below, and we're trending up, right? The easiest way is you draw a trend line, and I guess I could do that and then take it back off, okay? From here to current price, right? What direction are you moving? Doesn't matter if we're above or below or above, right? We're trending up, okay? So that's the easiest way to do that, right? If you don't want to get super technical about things. Okay, so we're trending up. I'm going to take this off. Okay, are we above or below our moving averages? We're above. Are we green or are we red? We're green. Okay, so you file all that information away. Now you can do this really quickly when you're trying to determine if you're going to take a trade or not. Now we're going to go to the weekly. This is all on Target. Okay, let's scroll back out. Okay, here's the weekly. What are we doing on the weekly? We're trending up, right? If we drew a trend line from down here up to current price, it would obviously be up. on a pretty good, about 45-degree angle, but you can see how price moves up, retest, came back down, it's back up again, it's holding. It almost looks like it's J-hooking here on the weekly. You see this? Okay, and we know what a J-hook is. It forms a pattern. It looks like a J, comes back to your nearest moving average, curls around, and then slingshots to the upside. What would be the level that would be crucial on the weekly? Right here. You see this? Right across there. Let me spread it out for you. Right across here would be the crucial one. I'll draw it in so everybody can see. Right there. You would have to break and hold this to go higher. Right? To go higher. Now what if we came up here and we rejected it? Well, then the next thing we would be looking for, do we come back below the moving averages? And then do we eventually take out this? Because then that could be creating a double top. And that would be signifying that momentum is going back to the downside, a reversal. Now, that doesn't mean that you have to wait to take a trade until down here. Absolutely not, right? What I would do is if I saw a rejection up here and then the moving averages come up here and then turn and we get the 10 crossing back over the 20 and the 30 to the downside, I would be looking for a buy or an entry signal, I should say sell, a short signal to the downside and get in up here, and then possibly, if it just rides that, if that turns and starts going down and price just keeps riding it down and you break here, if you break here, okay, what are the textbook rules of breaking a double top? So if this ends up being a double top, if you break the V, and this is the V right there, if you break the V, you're likely to go back at least to the origin of the move. Now, what is the origin of the move? I would say right here. Okay, so right through here, if you drew a rectangle across there, if price came up here, rejected, these moving averages turned and started back down, and price gets below them and starts riding them down, and you take this out, you would be highly likely to get back down into here. I'm giving you a whole bunch of hypotheticals right now, just so you would know what to be looking for. Okay. Whoop. I thought I just, oh, I got it. There we go. All right. You see that? So you got to know, where am I likely to go? Now also, you've got to know what? How long is it going to take to get there? This is the weekly chart, right? Each one of these candles is a week. So you're talking about a long time to come up here, reverse, come all the way down here, take this out, and get all the way back here. All right, but I'm just showing you the things that you should be looking for. All right, so now we go to the daily. Oops, I forgot. Hang on one second. Before we get off of here. Okay, where are we at on the weekly? We're red, but small red. See that? So we were green on the monthly, trending up. We are red on the weekly, but trending up. You see our moving averages. What are they doing? They're widening. They're going up at a nice 45-degree angle. All right, so now we go to the daily. Again, this is all how somebody should look at a trade for the best probability. All right, here we are on the daily. On the daily, we're red. Okay, but look, we flushed down and we've pushed back up a little bit. Let's look at the bigger picture. Okay, recently, we just talked about it. We've been trending up, and now we've kind of went into a contracting range, which doesn't necessarily mean we're going to go up. Right? It could actually drop down and break below here and then start back down. Okay, that can happen. But all we know is that right now we're in a contracting range. The first thing we're looking for to the upside would be a break above this resistance level. Then if we break above that one, we'd get up here, and this was that one we probably just drew in on the weekly. Okay, so this is your first one. You've got to get through here. Look, we weren't able to get through it over here. We weren't able to get through it here. And so far, we haven't been able to get through it here. Okay, so that doesn't mean we can't, but if price starts to come back down this way, we're likely to get to like here. And then maybe bounce back up through here. And then eventually, it's going to break one or the other, because that contracting range is going to keep coming together. Okay, price the range of price is going to get tighter and tighter and tighter, and energy builds, and then it pops one direction or the other. It pops one direction or the other. All right, so on the daily, are we above the moving averages? Yes. Okay, here they are. Are they starting to widen? Yes. What's volume doing? That's another thing we look at. Remember, relative volume? It's low. Okay, so I'm not looking for anything dramatic right now, right? Because relative volume, which also has to do with volatility as well, remember, on my chart, this is the 50-period moving average. So since this is a daily chart, this is the 50-day moving average of volume. We are below average volume right now. When it's above, okay, then you're above average volume over the last 50 days or 50 periods. Momentum is still to the upside though. You see this? Momentum, if I took a trend line, and let's just do it like this. Okay, see that? So you're trying to add all this together. Now you're going to go to whatever time frame you trade on. So for me, that's the 30-minute, so we're just going to go there. So we've taken a look at the wider, bigger picture. Now we're going to go to the trend, the time frame that we trade on. Look what we see here on the 30-minute. Again, take your wider view. Okay, your wider view, it has been to the upside, but we just rejected, right? We just rejected off of this area of resistance. Now these are 30-minute candles. So now you start asking yourself the same questions. Is price above the moving averages? No, right? We're below. We're below the moving averages. Is volume above or below average? That was the last candle on Friday. So we're below average volume. That's not necessarily a good thing, right? Not if you want to go long. Okay, what is momentum doing in the short term? Draw it in. If this helps you, draw it in. Okay, in the short term, momentum is down. Below average volume, below the trend lines, momentum is down. Are we interested in taking any short-term long trades right here? Okay, I just walked you through the very simple analysis of looking at the bigger picture. We've got all kinds of things that would say no. Monthly was green, weekly was red, daily was red. Okay, all of them are above the trend lines, but when we go to our trading time frame, which is the 30-minute, we are below the trend lines. We just recently rejected resistance. Volume is below average, right? And momentum is down. So if we try to take that whole pool of information and add it together, is this a good long trade right now? It'd be a big red X. No. Right? So you just move on to the next symbol. Right? You just move on to the next symbol. I'm not saying it's a good short either. Right? Because we know on the higher time frames, everything is moving to the upside. We're above the trend lines. Okay? Momentum is up. We're trending up. Okay? All that kind of stuff on the higher time frames is to the upside. So this really isn't good right now for anything. Okay, right now, not good for anything. Doesn't mean that that can't change. So if this gets back above, now we're obviously trending up overall, but we're more, when you're trading, right, and you're going to scalp or day trade, your most recent price action ends up being your most important. Okay, our most recent price action over the last couple days is to the downside. Volume, okay, other than a candle here or two, is below volume, relative volume is below average. Okay, so this is just not a high probability trade. We only want to take high probability trades. All right, let's look at a different name. Let's look at, I don't know, let's look at Euro USD. So we'll look at a forex pair. Now with forex, I do typically only go back to the weekly. All right, so let's go back. Weekly. Okay, this is Euro USD. All right, So where are we at on the weekly? Well, we were trending down, okay, fairly significantly. And then what did we do? We actually made a sharp pivot to the upside. So on the weekly, let's take a look. On the weekly, we're trending up. Is price above the moving averages? Yes. Are they starting to widen? Yes. Are we above or below average on volume? We are above average on volume. Okay. Is momentum trending up or down? It's trending up. This is all on the weekly. Okay, this is all on the weekly. Now, the one thing I would be concerned about is the angle at which we're going up, right? It's about 85 to 90 degrees straight up, which means at some point we could run the risk of exhaustion. And we're getting to a critical point. Let me draw it in for you. This is what you should be doing on your own charts. Okay. I got to drag that down. Okay, right there. All right, we're right at a critical level. Why do I say that? We came down here, we tried to go up, we couldn't. We came down, we tried to go up, we couldn't. We came down, we tried to go up, we couldn't, and then we came all the way down here. We finally have made our move back up, and now we're retesting this critical level again, this critical level of resistance. Now, if we're able to get through it, okay, let's just say, I'm giving you a hypothetical. Let's say we get through it. I would look for it maybe to get up into here. This would be a classic place for a break, retest, and then go. And then we would be looking up in here. Let me draw it. Trying to give you guys the best visuals possible. Okay, then you would be looking to get up into here. Bottom of those bodies. There we go. All right, so you notice where we stopped here on the weekly, right here at this crucial level. But if we broke through, we would probably come up, come back and retest, and then we would probably get up in here and try to test this area. This is on the weekly. Okay, now we go to the daily. And remember, we were big green on the weekly. All right, so here we are on the daily. I already have some levels drawn in because this is something that I occasionally trade, and I have friends who trade it, and I was trying to give them a look. So look at what we were doing on the daily. We were in a contracting range here, and we broke above it. And what happened when we broke above it? Price really accelerated to the top side. Here is one where it did not break, retest, and go. It just broke and went. And you're going to have that. That's going to happen sometimes, right? That is going to happen sometimes. But it's right up there at that key weekly resistance level. All right, so let's go through our analysis again on the daily. So we know we were big green on the weekly. We are big green on the daily. Is price above the moving averages? Yes. Are the moving averages widening? Yes. Are we above average volume? I would say we're about average volume. Okay? This is on the daily. We're about average volume. Again, the concern is look at the angle that we're climbing. Okay? So if we reject here, it would be highly likely for us to come back and maybe see this trend line right here. I guess I could extend it possibly. I'm still getting used to Trend Spider, but I could do it manually. About like that. Okay, so if we reject here, okay, we could come back and test this again, right, and then go higher, right? Or maybe price just pulls back to the moving averages and keeps bouncing off the moving averages. All right, momentum to the upside, right? Now go to whatever time frame you're going to trade. Let's just mix it up. Let's say you're trading the 1 hour on Euro USD. Okay, so here we are. First of all, scroll out. Okay, where are we at on the 1 hour? Strong trend to the upside. Is price above the trend lines? Yes. Are the the moving averages? Yes. Are the moving averages widening? Yes. Is momentum up? Yes. Are we above average or below on volume? On this, I would say we're above average volume. See this? Because there's your last 50 periods, and almost all of these candles are above it. Okay, again, the only concern is where we're at right now, at this very moment. Okay, at this very moment, we are, and we're just changing to a new candle. Let me do this. Okay, we're just changing to a new candle. See that here? So if you're somebody that likes to trade Euro USD, you can see how, especially from right down here where they started to widen, okay, an entry would have probably been right above this red candle here, which came down and bounced off the moving averages. Okay, you could have got an entry there. Your stop probably would have been just about below the body or maybe below the 10. And then look at the climb that you would have got. All the way up here and then all the way back. Maybe you would have took an exit in here somewhere, or this shooting star might have been enough. That's probably would have been enough for me. If I would have got this shooting star and we would have started to go red, I probably would have exited. Me, I'm just talking about how I trade. Okay, but if you're somebody that wants to wait until you either get a sharp break below or a close below, now this wasn't a close below, but that was a sharp break below. I guess if you're super patient, you'd still be in it, right? You'd see you've never had a close below since your entry. Whoop, I'm sorry. Since your entry right there. There would have been your entry. That's 16229. So let's say 1623, right? And if you were still in, we're up here at 1777. So that's 154 pips. 154 pips over 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25 hours. So over 25 hours, you know, basically just over a day, but that was over the weekend too, right? So just over a day, you're up 150 some pips. Okay, Akawande, yes, it applies for any time frame. Now, I personally don't like the 1 minute time frame. I think that's way too noisy. I occasionally, I mean very rarely, I'll use the 2 minute on market open if I'm trading like equities or something. But I don't like that, but I know a lot of people do. I know a lot of people who trade 1 minute, 2 minute, 3 minute. All of these still apply on any time frame. Let's just go down and just take a look on it here. Okay, we're going to wrap this up though on Euro USD in terms of the bigger picture. I hope everybody is seeing how we put this together. Okay, we did it on Target. We just did it on Euro USD. Maybe we'll do it on something else, but let's go down to the 1 minute. Okay, now it's going to get really crazy noisy, right? It's going to get crazy noisy, right? And you see all these candles, and this is just going back to like 8 o'clock. Right here is like 8 o'clock in the morning, right? So just 3 hours ago. Look at all these candles since then. Now, can you take scalps off of this? 100%. In fact, a forex trader that I know that does like to use, he uses the 1, the 2, the 3, and then for his higher time frames, he uses the 5 minute and the 15 minute because he's looking for what we call micro scalps. All right, so what is a micro scalp? Now, it's kind of what it sounds like. All right, so let's come down here. Let me make this bigger so you can see it. All right, a micro scalp. See here, when the 10 and 20, which would have actually occurred right here, when the 10 and the 20 are back above the 30, that is your first signal that you should be looking for longs. Now, this is the 1 minute chart, everybody. This is the 1 minute chart. Okay, so here was the candle that it was occurring on. So now your entry would be above here, right? Your entry would be above here. So 1738. Okay, and then look what happened. Boom. Still going, and then finally this candle closed below. Now, if you waited until it closed, you're down here. Still a great move, right? But a lot of people probably, when it started to make a pretty sharp break below there, would have closed out. But let's just even say that you waited until that candle closed right there. Because remember, this is a 1 minute chart. This stuff's happening fast. All right, so what would that have got you? Let's take a look. This is a 1 minute chart, 1738, and this one closed at 1754. So that's 16 pips, right? From here to here. That's just using like the standard rules and not really managing the trade that much. That's 16 pips, and that would have happened in, give me a second. Okay, so that's 9:33, and this one was 10:01, 34 minutes. So in 34 minutes, you would have got 16 pips. Okay, 16 pips. Let's scroll it in. All right, over here. Here we go again. You see we've got the 10 and the 20. They got above right here. They got above. I'll scroll it out so you can see better. All right, so that would have happened on this candle. So then your entry would have been, and look, we would have got the nice break, retest. That's what this wick was, retest, and then it went. So your entry was at 1758, right? Then it came up, went sideways, big blast up, never got back below, up, never got back below, up. And then again, we'll use this as a close. This was a first candle close below the 10. Would you have got out before that? I don't know. Okay, but we're being ultra conservative. So the close here, 1771. We would have got in at 1755. Is that right? Yeah, 17. We're just making it easy. 1755, and this was, what did we say? 1771. Okay, so that is 15, 16. So there's 16 more pips. 16 more pips on a micro scalp, and your time would have been from 10:25 to 10:50, 25 minutes. 25-minute trade, 16 pips. So in two trades, right, you would have got about, let's just say 30 to 35 pips, depending on where you exited, and total trade time about 50 minutes, right? So this is on a 1 minute. It absolutely applies on a 1 minute. Okay, look at this. Bullish engulfing, right? So when you take this out, you get back above. Are we widening? Yes, right? Trend up? Yes. Volume above average? Yes, right? This is all on the 1 minute. Okay, you could take that right here, okay, right there. The high, 1772. Okay, went up here. It got as high as this, but this formed sort of a shooting star. For me, my exit would have been right there. Okay, right there. So let me come down to the low. Okay, 777, and this was 772. So that was only 5 pips. It was only 5 pips. It was a winner. It was only 5 pips, but these are micro scalps, and that would have happened quickly. 1, 2, 3, 4, 5, 6, 7 minutes. 7 minutes, 5 pips. Is that a trade worth taking? Well, you'd have to look, right? If you'd already identified these areas that they could be resistance, maybe that's not a trade you would have took because you thought, you know what, I'm probably not going to get at least 2 to 1 or 3 to 1. Okay, maybe, because it depends on where you're going to put your stop. This was a bullish engulfing, but are you going to put your stop, where are you going to put it? If you're entering here, are you putting it under the 10? Okay, well, if you did, you would have got, well, depending on if this went down first. I don't know if it went down first. If you're just barely putting it under the 10, maybe you got stopped out, unless that went down first and then took it out on the way back up. or are you putting it clear down here underneath the bullish engulfing candle? If you're doing that, right, that means, let's look at this candle, 772, 4 pips. So it takes 4 pips to go 1 to 1. It would take 8 pips to go 2 to 1. It would take 12 pips to go 3 to 1. Were you likely to make 12? Probably not. Were you likely to make 2? And maybe that was all you were trying to get. Hey, as soon as I get 2 to 1, I'm out. If that's the case, yeah, you would have made it. You would have made 8 pips. Okay, but that's where your style comes into play. Meaning you personally, I'm talking to not just Akawande, everybody. Okay, what is your style? Are you just trying to hit targets? If you're just trying to hit targets, and that's how some people trade, then yeah, that would give you a 2 to 1. Even if you would have put your stop clear down here, which to me, that's very liberal. That's very liberal. I'm usually not going to have stops that big. But let's say you put it underneath there. Okay, that was a 4 pip candle. So 1 to 1 would be 4 pips, 2 to 1 would be 8 pips, 3 to 1 would be 12 pips. So if you're one of these people that, hey, I'm just trying to make my target and I'm out and I don't care what happens after, or you can always re-enter, right? That's what some people do. Okay, if they get, I'm just making this up. Let's say over here, okay, let's say they entered there, their stop was below. Okay, so that candle, this was a 3 pip candle. So that means 9 pips would be 3 to 1. So let's figure this out and I'm going to show you something. Okay, so 55 and 9 would be 64. So let's find 64. Right there. Okay, so right there, that's all you'd have to do to hit 3 to 1. Right here. Okay, there's 3 to 1. Okay, now what some of these guys will do, they will exit there, and then if price comes here and starts to shoot up again, they just re-enter. Right, and then they look for 3 to 1 again or whatever. Now you're going to miss out on some of this, right? Some of these bigger moves like this right here, if you do that. But being ultra conservative like that, if you're constantly like it's say 3 to 1, 3 to 1, 3 to 1, you lose. 3 to 1, 3 to 1, 3 to 1, you lose. 3 to 1. You're going to rack up your account like crazy because it's so conservative and it's totally rules-based. As is stopping once you break the 10. That's rules-based as well, right? But it depends. Are you, I'm saying patient enough and we're on the white 1 minute chart, but are you patient enough to wait for this? Or do you feel like, hey, once I get whatever I'm looking to get, I need to get out and I can always get back in. And so instead of catching 16 or 17 pips, maybe you'll catch 9 here, okay? And then maybe you'll catch whatever. You know what I'm saying. I want to make sure I calculated this correctly. 55 and the low was 71. Yeah, I calculated it correctly. I was just making sure. So wait a minute. I had to have done this wrong then, right? 55, and then where is 64? Yeah, I did this wrong. 64 was up here, right in the middle of this candle. So that's where 3 to 1 would have been. Okay, 3 to 1 on this, if your stop was just below it, would have been right in the middle of this candle. That would have been 9 pips. 3 pip stop loss, 9 pip target. 3 to 1. Okay, so hopefully that makes sense to everybody. Let's go back over real quick and look. Let's see what ES is doing. Okay, so ES, you see we went 2 resting candles and then we've lost momentum. We've come back and we've tested the 10. Right now we've tested the 10, which is also confluent with our support level at 32.21.25. So we'll be looking to see, now there's a lot to get below here. If it's going to go down, it's going to take strength. Why? Obstacle, 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 and this little pivot here would be an obstacle. So if it gets through there, that is showing you a lot of strength from sellers. So something to keep your eye on, because we're about to wind this up for the day. Does anybody have any other questions? I wanted to try to, we've been on here about 50 minutes or so. I wanted to try to do a little bit of teaching on how to look at the bigger picture to determine whether trades are higher quality or not. And then as always, we looked at ES, and I looked at Target, and I looked at a forex pair, went through, and based on Akawande's question, we went and we looked at the 1 minute, because yes, these strategies work on any time frame, from the monthly all the way down to the 1 minute. Okay, it's however you want to use it, right? It's however you want to use it. So if nobody has any additional questions, I thank you for joining. Please smash that like button, give us some thumbs up, subscribe to the channel, turn on your notifications bell, and if you've never joined us in the simpletradinglife.com room, go to simpletradinglife.com, click on that free chat room button, and you can join us, and everything in the room is absolutely free. We have tons of lessons. We have all the recordings of all the live streams. So you can go back and you can watch previous live streams and pick up, okay, oh, here's what they were teaching that day. Here was a lesson on this strategy, or here was a lesson on how to read news into the market, or whatever the case may be. And then obviously we have our main chat where we have a lot of dialogue, and then we have other rooms as well. So come give us a try. I think we just went over 400 members, and the reason I say that is right before I got on here, I thought I saw some sort of an alert that we were over 400 members now. So I'm pumped about that. Now the next thing, let's get to 500, and then 1,000, and then, who knows. We're going to try to make this thing the biggest free trading community on the internet, and that can only happen with your help. So I hope everybody has a great day, and hopefully we'll see you in the room. Bye-bye.